Oops, sorry, I didn't have my mic going. But just give everyone a few minutes to get in here, and then we're going to get to discussing. And for anyone that's joining that knows nothing about the strat, let me know. And if you've been here for a while, let me know how long you've been here doing the strat stuff. And just so you know, the chat for YouTube's over here, and everything else is going to be right in front. So if I keep looking to the right, that's why. Got 24 people in here already, so how are you guys doing? Holidays are just around the corner. You doing anything fun? Hey, congrats on the golf. Thank you. It was very fun. It was so cold. If you can hear to my voice, I'm still getting over being sick. Excited for the week. Awesome. Holidays with the family. Great. Have the scanner, but I'm learning about all these different 3-2-1s, 1-2-2s. Yeah, good. If you're learning, this will be a great stream for you. New-ish, was part of Rob's program for a bit. Cool. Bow hunting. Oh, that'll be fun. Where are you going to be bow hunting? And for those of you that are joining in, if you're watching the replay, first 5 to 10 minutes, you can probably skip through, and then we're going to get diving into everything else. All right. Do you have anyone that knows nothing? They're like, I just clicked on this. Who the hell are you? Those are the people we want to be talking to. Louisiana Northwest. Oh, that'll be cool. I wonder, what are you hunting? Is it birds or deer or what? I went to, Kansas a couple of years back. Gosh, it was probably 3 or 4 years ago now, but we went hunting for turkeys. I didn't get anything. We just saw a lot of squirrels, a lot of cows, but it was still fun nonetheless. My brother and my uncle got some nice ones, some whitetails. Oh man, I wish I had it saved on my phone, but we saw my girlfriend's neighborhood, I think it was yesterday or the day before. I think it was yesterday. We saw an 8-point buck just standing right in one of her neighbor's yards. It was a beautiful animal. Awesome. All right. Well, bear with me if my voice sounds crazy. Still getting over a sickness, but let's dive in. You can see our thumbnail from today. Let's dive in. Wow, Bitcoin got a little bit of a puke going. So the first thing that I want to talk about is why should you trust me or someone else as far as talking about trading? I really don't think you should. I think you should look into what people say. Don't take anything at face value, because 90% of people fail. So your goal should not be find someone that looks or talks the right way and then listen to them. It should be figure out what the truth is, because then you don't need anyone else if you know what the truth is. Or, you can gain other things from people besides just learning trading stuff. So that's the first thing. Think in terms of trying to understand truth, because things can be understood. The second thing is everyone, people are liars. People do this or that. So don't trust people. Look at what they're saying and how it works, right? Always think in terms of results, because that's at the end of the day what matters. So if you're looking for, trading strategies, look at results. Look at, does this actually encapsulate the market properly? Like, can it explain every move that we see on this chart? If so, it's probably correct. And that's what we're going to be talking about today. So the first thing is we need to get rid of some false beliefs that we may have. And if you've been trading for a while, this is something you want to listen to. If you've never traded before, you can probably start skipping through this. And if you're on the stream, this will just be useful so you don't fall into any of the traps. The first thing is we need to understand what price is. So when we look at these bars, right, we can see them moving on Bitcoin, or moving. When we're looking at this, what's actually happening is price is aggregating, or these bars, they're aggregating, which means what? It simply shows us aggressive buying and aggressive selling. So on most charts, candlestick charts, red indicates aggressive selling. Green indicates aggressive buying. And that's always true. Because in order for a bar to become green or red, there has to be aggressive buying or selling that's going on. And how do we know this? Well, I'm not going to pull it up right now, but if we're looking at Bitcoin, you can see, if we just zoom in here, we have a bid and an ask. So the offer or the ask is 88,568. And then the bid, 88,576 now. And you can see these are going to move. And what they are is resting orders. Like you have someone that wants to buy at this price, the bid, and you have someone that wants to sell at this price, which is the offer or the ask. So you have people willing to buy here, people willing to sell here. So if no one moves aggressively, meaning they're trying to buy be below current price, sell above. No one does anything, the price goes sideways, does nothing. So you can see right here, the bid and ask were to just stay there and no one did anything, we would not see price moving higher. What's happening when prices go from this price and then they move higher and then they move higher? You have the buyers, you have the sellers. The buyers decide we're going to buy where the sellers want to sell. And that's what happens when this bar goes green here. It opens, buyer, seller. The buyers go, I want to buy at this price. Therefore, the bar goes from wherever the open is and it's going higher. And then if the buyer's still aggressive, they buy here. And then the offer goes higher. And then the buyers buy here. The offer goes higher or the ask. Then they buy here. And you'll see, right, the bid and the ask, they're just going to move higher because you have buyers that are willing to pay more. Because imagine, if you walk into a car dealership, they have a Tesla sitting on the lot, you want to buy a Tesla. And they're like, our offer or our price for this Tesla is 40 grand. And you walk in, you're like, I have 35, right? So you have the offer, 40 grand, the bid, right? 35. This is you. If you really want the car, you're going to pay 40 grand plus some fees. If you don't really want the car at 40 grand, you're going to stay here and you're going to be like, you have to come and sell to me at a lower price. So in order to make price move, like you just saw here, it's like, boom, bid and offer. The buyer's like, I'll pay your price and, I'll pay for the next highest price and the next. And that's what causes it to move up. Same thing on the downside. Now, when we're looking at Bitcoin, you can see these spreads are very tight. And it's because one Bitcoin's $88,000, right? You're not going to see as much here. But if we were to go like a perpetual future, we might see it just because they're slightly illiquid. But it's not the point. The point is just understanding aggressive buying, aggressive selling is what causes movement. Because if no one's aggressive, sits like this, nothing happens. Price goes sideways. What does that look like? It would look like this, right? If no one's doing anything, let's say the offer's here and the bid's here. Price looks like this, right? It's going nowhere, pretty much flat. What this looks like in terms of candlesticks, it would look like this. Stuck in the middle, right? It's going nowhere. It's just completely stuck within a previous range. This bar's low, this bar's high. So when nothing's happening, nothing's happening. Since we know this is true, there's some myths that we need to get rid of. The first is moving averages. So if we add a moving average to our chart, let's see. Let's just do, right, we can do it any of these. They all are not, they're just not going to do what you want. Now, when we look at this, people will say, well, price touched it here and then it went higher. And then, it went through it here and then it went higher. And then it touched it here and then it went higher. Then it touched it here. And they'll say, right, this is what I'm going to trade off of. The problem is it's follow the leader. Like price is going somewhere and then the moving average is just following price. Because it's an average. What it's doing is it's taking the last 20 bars and it's just averaging it out. It's like, here's the average price, the last 20 bars. So you're never going to be able to know what's going to happen next because you're following. It's like, if you're following me and I'm walking down a road and I go left and then I go right and then I go left and then keep going straight. It's like, you don't know what my next turn is going to be. So you actually don't know what's going to happen. Therefore, you don't know what's happening because it's lagging. It's following price. So this is not going to help us. Can you use it to, trail price? Like if I buy it down here, can I like put my stop below this or something? Sure. But it's not going to tell you what's going to happen. It's not how it works. So moving averages, get rid of them. The other thing that we can get rid of is things like support and resistance, which are still true in some sense, but the way people discuss them, they'll say, well, here's my high. This is a resistance level. And you can see price went there and then went the other way. So it's like, is this resistance? Well, if this level is your resistance, it went higher than your level. And then it went lower. So since we took that out and then we went the other way, this was not a resistance level, at least not in the sense that other people will say, where it's like, if I put this level down here, oh, there's resting buy orders or there's demand here. There's more buyers than sellers down at this level. None of that's true. Since we know price moves because of aggressive buyers and sellers, it does not matter how many there are. There could be $100 billion that wants to buy Bitcoin, but they don't want to buy it at 88,000. They want to buy it at 50 grand. So you have a lot of buyers that want to buy it at 50 grand. Is that going to push price higher? No. So what matters is the aggressiveness. So to say, well, there's resting limit orders to buy at lows or resting limit orders to sell at highs doesn't make any sense. And that's what support and resistance says. This also, supply and demand. There's never more buyers than sellers, right? If I want to go sell a car, someone has to buy it from me. So it's 1-to-1. If I want to go sell 100 Bitcoin, I need to find someone or multiple people who are willing to buy 100 Bitcoin. 1-to-1. There's never more buyers than sellers. And therefore, supply and demand does not work, at least not in that sense. We could also discuss, Fibonacci and stuff. Really, people who think when they look at price, Fibonacci is going to, fix all their problems. Doesn't work, because if it did, every move would move to the penny, right? It's like if I have my Fibonacci and I figure out where to put it, which is one problem, right? It's like I put my Fibonacci here. It's like it should go to whatever my level is, whatever my strategy says, it should go to the penny. Because if it's mathematical, it would be an exact number. And this is not something I've taught. I actually want to show you some cool stuff. But this is something that Rob taught. And he invented or came up with the strat, which is what we will discuss as far as what is the truth about how this works. But when we're looking at this, right, if this was my level, it's like it should move to the penny here and then it should go the other way, because math is exact. 2 + 2 = 4. And this is what Rob would say. So the market doesn't move on Fibonacci either, because that isn't exact, right? It went a few pennies below that. So, if our math is wrong, it's going to move further or closer. It's not going to move exact to our levels, right? It's like it hits this level exactly. It's like that has to happen every time for Fibonacci to be true. And it doesn't. There's other ones we could talk about. Let's see. ICT, like that's a whole, thing that we'd have to tackle. There's a few concepts in there that are true. There's some that aren't. So I wouldn't worry too much about it. What I would say though, is if you're using any of these indicators, any of these other strategies, or if you're thinking in those terms, we just want to get rid of them. The last one we'll talk about is chart patterns. So a lot of people, they will draw out patterns that they see in price. The problem with this is you can't quantify it, which means you can't prove the pattern is actually there. And if you've ever tried to automate patterns, you would realize this very quickly, because what someone may call head and shoulders, which is one of the really common ones people trade, it's like this would be the shoulder, here's the head, and then here's a shoulder. So it's like you can see we have one shoulder, one head, and then shoulder number 2. So people will say, well, head and shoulders, therefore price should go lower. The problem is price doesn't always go lower after head and shoulders, right? Sometimes it goes back up. So like, let's say we go over here and we're looking for the same thing. We're just using our eyes, right? Shoulder, head, shoulder, didn't go anywhere. Shoulder, didn't go anywhere. Goes completely the other way. So this is a bullish head and shoulders pattern to the downside. So it's like, this doesn't work because you can't quantify patterns. You could have 100 traders who trade with patterns look at this chart and they would all see different things because they're not looking at the data in a way that's like math, where it's like 1 + 1 always equals 2. Therefore, if you're going to try and trade for a living, you can't. not with chart patterns. Because if 1 + 1 can equal 3 sometimes, your strategy is never going to work. And if it does, it's not because of the patterns per se. It's more so because of your risk management, which is a good thing. Like if you can keep your losers small and your winners big, you're doing it correct, but it could be better if you're still trading patterns and all this stuff that you can't actually prove. Now, I'm going to answer a few questions or just take a look at the chat, and then we're going to talk about what is actually true. And it's going to be relatively simple. And you can think of it kind of like the law of gravity. It's like law of gravity. I have my phone here, right? If I drop it, it goes down. Always, every time. Like 1 + 1 always equals 2. Law of gravity, I drop it, it always goes down. Right? Like kind of like Bitcoin right now, getting destroyed. Wow. Let's go see what it looks like here on the daily. So potential 3, Bitcoin's trying to take this out. 87,548. We'll see if it does that as we're discussing here. But that's where it's trying to go. And then maybe all the way down here, 85K. So we'd have target 1, target 2. But that being said, let's go and take a look at the chat. Love your program. Thank you. Thank you. That's awesome. Trying to start fresh, going all in on strat. Beautiful. By the end of this, I'm going to leave you with a very simple strategy, or at least an idea of how to build your strategy and put it together. But you will understand what you're looking at when you open a chart, which is the goal here. Yeah, Rob did have a good laugh. All right. So, by the way, if you do have questions, throw them in the chat, but it looks like we're good for now. So the strat, what is actually true about price? There's only 3 universal truths. So like, think of it, if we opened the law book for, the state of Wisconsin, there's like thousands of laws, right? It's like if you do this, then you get punished every time, or at least that's how it's supposed to be. So with the strat, there's only 3 truths in, the laws of how price works. There's only 3. And these 3 truths start with universal truth number 1. And please try and disprove me because you won't be able to. But universal truth number 1 is that from one bar to the next, there's only 3 scenarios that can happen. So if we open Bitcoin, there's only 3 things that it's going to do every single day. There's only 3. And it could be on a daily basis. We could go on a yearly chart, which most people don't use, but we do. It's like there's only 3 ways that these bars can happen. So the first way is what we call scenario 1. And you'll see it's here. So when we look at this, we can see this green bar. So from the high of this point right here, which is about 44,000, to the low of this, which is about 16,500, this bar is fully within the previous bar's range. So we call it scenario 1. It did not make new lows. So you're going to see from the previous bar's lows, if we were just going to connect it, this bar's low is higher than that. This bar's highs, and if we were to connect it, you can see this bar's high lower than this one. So it's fully within the previous range. This is consolidation. So like we showed you before, if price is doing nothing, it looks like this. Boom. Inside, nowhere near taking this, nowhere near taking this. It's doing nothing. And what we can expect is that price continues to do nothing. It's just kind of stuck in the middle at that point. Now, scenario 1, it's a consolidation. The second scenario is called scenario 2. And scenario 2 will happen after a 1 always. It has to happen after a 1 always. So what a 2 is when we look at this bar here. You'll see this bar takes out this previous bar's high. So this high was 44779. Price traded at least 1 penny above that, which caused this. You can see this is a 2 to the upside. It's making higher lows to the previous bar. It's making higher highs way up here. If we connect them, you can see this high is way higher than that one. So this is a 2 to the upside. We can also have a 2 down. So when we go here, you'll see this. The high of this bar compared to the previous bar, right here, this high is much lower than this one. So this is a lower high. We also can see the low of this bar, lower than the previous bar's low. This is a lower low. A 2 is a trend. So we could say price was trending down here. Then it went inside, so it consolidated or it went sideways. Then it became a 2 up. Now it's going trending up. And then this year, you're going to see this year, although we're below its yearly open, which is a problem, right? That is a problem. You'll see we have higher highs. We have higher lows. So this is still a 2 to the upside, even though it is red. This is still trending higher on the year. Now, the most important scenario, scenario 3. This is the third thing price can do. Most people do not know this. And what it is where it makes new lows to the previous bar's range and new highs. Notice this bar, lower low here to this low. This high, much higher than this. This is scenario 3. And what a 3 is a failed 2 or a failed trend that then turned into a reversal or a rejection. And how does a 3 happen? Well, we might see it here, Bitcoin on the daily. Maybe today. We'll have to see if it happens here. But what happens is you have a 2 in one direction. So you'll see this low is higher. This high is higher. So it's going up, but it is red. So in order for the 3 to happen, 2 up, but red. That is a potential outside bar. So if this goes where it's supposed to, we would see this. New high and new low in one bar. And just to give you a really quick example, price could look like this. So let's just say it's going up. It goes 1, right? And then a 1 eventually becomes a 2. So you'll see this high is now higher than the previous bar, and we have a higher low. So it's a 2. Then if this flips red, it is a potential 3. And once it takes this out, it is now a 3. So you can see it makes a high, changes color, then it makes a low. So we have scenario 1 stuck inside previous range. Scenario 2 up. This is uptrend. Scenario 2 down. This would be a downtrend. And then we can have 3, which is a rejection. So it went down, then it went green, and then it reversed. So it's now going higher. Those are the 3 things price can do. So whenever we look at a chart, we're only looking for those 3 things. It makes it very simple. So if we just go, I don't know, we can just zoom out. We'll just go to a random spot in Bitcoin here. So here it is, right? 2 to the upside, 2 to the downside, 2 to the downside, 2 to the downside, 2 to the downside. Then it went green here, became 3 to the upside. Then 1, 1. You can see it breaks, but it doesn't go anywhere. So 2 down, 2 up, 1, 3 going outside of this previous bar's range, 2 up, 3, 2 down, went green, and then it ran out of time. It closed. 1, 2 up, 1, 2 down, 2 down, 2 down, 2 up, 2 up. It was 2 up, went red, potential 3. There's your outside bar 3. And then 1, 2 down, 2 down, 2 down, 2 down, 1, 2 down, 2 up right here, 2 up, boom, right? Pretty big move there. And then 1 and red. So they brought it all the way back in, right? And then 2 down, 2 up, 2 up, 2 down, 1, 2 down, right? You should be able to look at a chart and just know. And it does take a little bit of time because there are some bars you have to kind of squint and you're like, I can't quite tell, but there's only 3 things that happens. If you can disprove this, I will give you $10,000 cash and just send your Venmo in the chat. You can't, and that's why it's a universal truth. Good luck. Now, since we know this happens, it allows us to know where is price trying to go, because the scenario 3, since we know it happens, allows us to gauge magnitude, or where is price trying to go. Because if we have a 2 down, it's like, okay, it's going down. It goes green. It's like, potentially, maybe, this is going to become a 3. Where would it become a 3? It's like, this would become a 3 if we go 1 penny above this, and then it's a 3. So anytime we have a 2 down in green, it is potential 3 to the upside, and we have a target. We have a level right here, and we know anytime we're above this level and the bar is still open, it's trying to do that. Same thing on the downside. It's like, it's going up. Then it goes red, potential 3. Where would it go? Well, 1 penny below this low, and then it becomes a 3. There it is. So since we know this, if we just look at Bitcoin, we can see in real time, this may happen. We had a 3 yesterday, right? So it did go down, then it went green, then it went 3. We went 2, went red here. Potential 3 gives us a 1,000-point target if we're below that. So now we can start understanding where is price trying to go objectively. And this is objective because either it's true or it's not. You're either below that open or you're not. And this is why you need to be objective, because that makes it a lot simpler, right? Now, if you're scalp, so we had someone say that because I scalp a lot, awesome. But we also prefer those big moves on the big time frames. If you're scalping, like I see a lot of people on Twitter, they scalp and they do 1-to-1 risk reward and they're making money. It's like, awesome. I want everyone to make money. But that shows that you really don't actually know where things are going. If you can only make 1-to-1, like that's your coin flipping. And even if you win 80% of the time, you're still coin flipping. It's like, what if we could make like 1 to 100, 1 to 10? Like, if we understand, it's like, you know, if price is going from here all the way to here because of the potential 3, it's like 1-to-1 doesn't make any sense at all. Because if we know this below this open on Bitcoin, if we know as long as we're below that, it's potential 3, we're not going to put a stop here. Because our stop should be where it's no longer trying to go outside bar, which would be the open. And our entry would also be somewhere near that open, if not above it. So we need to understand how it works, and then we can hopefully make that better. But does that make sense for those of you guys that are just joining in? Do I recommend stocks and stuff? Yeah, we'll talk about that. You'll understand. So this is the thing. You just need to realize it's not me. I'm not like, oh, you should trade stocks because of this. It's like the strat tells us the truth, and the truth is this. Therefore, we should do this because the truth is this. It's like, that's how it works. It's like, you shouldn't jump off the building because you're going to, die when you hit the ground. It's like, true. Maybe you should just kind of like stand on the ground and jump and you won't die. It's like, true. So it's not me. It's just, is it true or not? And that's the focus. So we always need to speak in terms of the truths. We've already discussed the 3 scenarios. So that's that. From the scenarios, we can gauge reversals. I will not teach you every reversal here, but I will teach you the ones that are most common. And, 60%, 70, 80% of setups may just be what we teach you here. So the most common reversal looks like this. You'll have a 2 in one direction, so going down, and then a 2 in the other direction. It's like price has reversed. 2, downtrend, it's going down. The second we're 1 penny above this, 2, uptrend, it's now going up. It's like 1 penny and now it changes everything. And then if it doesn't reverse, it's still going up, right? It never reversed. So since we understand what the 1s, 2s, and 3s are, we understand what price looks like when it reverses. So 2 down, 2 up reversal, and then still good. It's just 2, 2, 2, 2, 2, 2, 2, 2, 2, this is what a trend looks like. A lot of twos in a row. And this can happen both ways. So you can have it going up, two up. Let's say maybe this one's red, which is a good thing because we have a seller in here. Then two down, it has now reversed. So when it goes red here, this is rejecting. This is potential 3, not a reversal. It's a rejection. When this breaks this low, this is now reversal. 2 up, 2 to the downside. And then if it continues, right, it's going down. Excuse me. Now, reversals. We can gauge the target. We know how far the reversal is attempting to go, because if we know a 3 is, right, it goes red here, where's it trying to go? Down here. This is our reward or our target. We call it magnitude. This is a 3, right? Now, what if it occurs in multiple bars? These 2 bars, right? It went 2 to the upside, 2 to the downside. So it's reversal. These 2 bars are a 3 to these 2 bars. So you can see it reversed here below this level. The target, we can look to take this out. We also had another target right here. So when we take reversals, we also can gauge the magnitude. How far is it trying to go? Because we know outside bars occur. Therefore, we know where it's trying to go. So if we're trading price, right, we have price go all the way up in here, and we have a potential 2-2 reversal. The magnitude would be whatever that outside bar magnitude would be, which is this. So this reverses, boom. This would be our target. Then we now have a 3. So we can see 2-2 reversals will cause 3s. The other common reversal you will see is what's called the inside bar reversal. We have a bar in one direction. Price consolidates inside bar, 1, and then breaks in the opposite direction. 2 down in this case, we'll say. 1, 2 to the upside when we are 1 penny above this. The magnitude is very similar. We're always targeting the high prior to this inside bar. And we can look for this both ways. We have 2 up, 1, 2 down. We're always looking for this. And this is the break of that reversal. These are the most common ones we will see outside of just the outside bar. Like price can just go boom. It's like that just happens. And this is what makes trading difficult, because the second it goes green here, it's like maybe it's going outside bar, which changes what's happening. Now, before I keep going, does this make sense? After a 1, I see a 3. Yep, because after a 1, you get a 2, and then if a 2 fails, it becomes a 3, like right here. 1 becomes 2 down, then it comes back above that, goes green here, boom, 3. Because a 1 goes into a 2 can go into a 3. And that's all that happens. So if you have a 2, right, potentially that could turn into a 3. And that's the risk. So if you're trading, it's like, it's a 2 right now. It needs to stay 2. Because if it doesn't, 3. Or it'll reverse. So we just have to understand that. Gets confusing about all time frames. Just do one time frame to start here. You just have to learn 1s, 2s, and 3s, the simple stuff. Now, speaking of multiple time frames, the second universal truth is time frame continuity. And what it is it tells us the level of aggression of buyers and sellers across time frames. And this is important because, like we already discussed, the whole market, what is the market? The whole market is you have the bid, you have the ask or the offer, and either they're aggressively buying, right? Like they're willing to pay higher prices, or they are aggressively selling. They're willing to sell at lower prices. That's all the market is. So whenever we open a chart, that's all we're looking at. So we go to the yearly. Time frame continuity tells us this. It is going up this year. It's a 2 to the upside. But below this open, The sellers are more aggressive. So what are the sellers doing this year? It's like they're selling at the bid. They want to get out. Now, has price reversed? Nope. So it's potential 3, but we only have 9 days until next year. So it's like, it's probably not going outside year. You don't have enough time. But that's what's happening, right? Sellers selling at the bid this year, at least if we're below that, 93,500. And then next year we'll open and then we'll have to see. Last year, what did they do? Well, anytime they were above 42,145, buyers taking the offer, willing to pay higher prices, prices go higher. That's all that's happening. So it's really simple. Now, since we know this about the color of the bars and what it tells us the level of aggression of the buyers or sellers, we can look at this across multiple time frames to identify algorithmic trading and or just really aggressive buyers or really aggressive sellers. So what does an aggressive buyer look like? Well, Bitcoin went from 40 to 100K in 1 year. So obviously it looks like this. You'll see it was a 2 down, 1. What happens after a 1 always? A 2. And then did it stay 2? It did, because it was above the open. Therefore, there it is. The 2-1-2 reversal, 156% at the highs, gives you 120% at the end of the year. And if you want to go dig through our macro video, I put a video out right at the beginning of 2024. And I said, you want to know about this, going to all-time highs in Bitcoin. And you can vouch for me in the chat if you'd like to, or just go do the work yourself. Again, this is not about me, my performance, what I do, what I believe, none of that, right? It's like, what does price do? Because I want to show you what it actually does, so you don't have to rely on other people. You can just collaborate and do better together, right? Now, time frame continuity, multiple time frames. How many time frames do we look at? At least 4. And you'll have to forgive me. I'll need to make sure these settings are correct. Yeah, so that's not right. Let's see. Dark theme. Yeah. Oops. What am I doing? Come on, where is it? Ah, no, it's not going to let me. So I'll just have to go like this. I wanted to set it as a default, but it is what it is. All right. So we're going to remove all indicators because we don't need them, and all drawings. So if you're on TradingView, you can do this, right? 4 time frames minimum. Now, the only thing we need to do is make sure the symbol is the same on all time frames, and that's it. And what I'm going to do is I'm going to add 1 indicator just so you guys can see which time frames are which. So we got we'll just say the month. These are the common time frames we will use if we are, intraday trading and or shorter term trading. But we will use the month, week, day, and 60-minute groups. And I say groups because what does a bar show you? A bar or a candlestick, and if we just zoom into 1 bar, just this month, what does it show us this month? Well, it's representing a group of traders that are trading this month. So this month, what's happening? Well, below the monthly open, 90,433, the seller this month is more aggressive. So out of all the traders, the sellers are more aggressive than the buyers. What else do we know? Well, it is a scenario 1, and we have 9 days left. So it's scenario 1, we're already 2/3 through the month. So these sellers, although they are more aggressive than the buyers because it is red, it's not going down, because is it making lower lows? No, it's making higher lows, and it's making lower highs. So we can see, right? It's going nowhere. Scenario 1, consolidation. This week, what are they doing this week? Well, this week, the sellers are more aggressive this week as we are below the open. Again, the only way that happens is if you have the sellers, they're willing to sell and push prices lower. It's the only way that happens. And we are scenario 1. So it's consolidating this month. So it's like nothing this month. It's consolidating this week as far as now. We still have 6 days left. So doing nothing. And then we go to the day. now something's happening, right? We have a 2 up on the day, but it's red. So today the sellers are more aggressive, although prices are still going up today. So we can say we're going nowhere on the month. We're going nowhere this week. Today they were going up, but now they're trying to go outside bar. And then on the 60 minute, you'll see 2 down. It is starting to come back. So maybe it goes 3, but 2 down. And it's below its open. So what you'll notice is if we just kind of look at this, the month is red, week is red, the day is red, the 60 is red if we're below 88594. So what does this tell us? The monthly group of traders, anyone trading this month, it could be you, me, China, the United States government, doesn't matter. Anyone trading this month, sellers are more aggressive, it's going nowhere. Anyone trading this week, sellers are slightly more aggressive. Anyone trading today, slightly more aggressive on the sell side. And then anyone trading right now, technically more aggressive on the sell side. So what do we call this? We call this full time frame continuity. The month, the week, the day, the 60 minute, they're all red. We can define this as the last price traded is below the month, week, day, and 60 opens. We would call this full time frame continuity down. Now, just because the sellers are more aggressive, does that mean there's a trade? No. Because this week they're doing nothing, this month they're doing nothing. It's like, I'd rather not, right? I want to trade where the monthly guy is like, I need to buy like 1 million Bitcoin. It's like, that's the trade I want to take because that's going to go from like here to like all the way much higher, right? This month they're doing nothing. So, we'll just wait. But when we look at 4 time frames, we can have a good idea of what's happening, right? Because we know this month they're doing nothing. You'll have people in here on a 5-minute basis. They're like, wow, like Bitcoin's really moving around. It's like, well, this is, it moved just under 2%. So like it's moving a little bit, which might be enough if you're intraday trading. But like last month moved 30%. I want that trade, right? I want the 30% trade. I don't want the, 1.5%. And I have to perfectly time the bottom here, perfectly time the top. It's like, not as fun. The other thing we could see is full time frame continuity to the upside. What does that look like? Well, here it is. Vera. Above the month open, 33.36. This month, the buyers, anyone trading this month, the buyers are more aggressive. So if you're selling this month, you're just not aggressive enough, right? Buyers are more aggressive. Anytime the week is above its open during this month, the weekly buyers are also more aggressive. Anytime the day is above its open in here, the daily buyers are more aggressive. And if we go to the 60, anytime we're above the 60 open, right, 60 buyers are more aggressive. This would be a period of full time frame continuity up anytime that's true. And if we want to look at indicators, let's see, time frame continuity, TFO did make a pretty cool one. So if we add this to the chart, what we can do is we can actually add the month, week, day, the 60 minute, and it will highlight and it'll show you the level. It's like, once we're above this, everyone's buying aggressively. Prices are going higher anytime we're above that, right? Now, if we go to like a 5-minute, you might see this a little bit cleaner, but you can see, right? This would be the 60-day, week, month open, whichever one that needs to change. But once we're above that, it's like the buyers for sure are more aggressive and prices for sure trying to go higher. So when we have full time frame continuity, the level of evidence is high of the aggressive buying or the aggressive selling. And the key is aligning them all together. Because when we take a reversal, so like if we go to Vera on a daily basis, I'm going to shrink this down here. Let me see if I can copy this first. I'm going to shrink this down just to show you. When these conditions align, Vera, you will see this lime green bar, right? This is full time frame continuity up. When did that happen? Well, it went full time frame continuity up, right? This would be the level where it's above all the opens. Then it became 2 down, 2 up reversal. So we have an entry signal, 33.95. We also have a target, should be 34.46. Now you might say, Alex, it went a lot further than the target. That's the whole idea. We can have a rough idea, it's going to move a little bit here, But if the buyer is really aggressive, they might, if they're willing to buy at 34, who's to say they won't buy at 40 or 45 or 50? So the goal is, if we take trades with continuity, ideally full time frame continuity, the month, week, day, and 60-minute, we will see them go much further because we have an aggressive buyer. Anyone selling this name, they're getting demolished, right? Like, it's just destroyed. Then you can see there's some selling. Then right here, the buyer's back. Boom, we're going to buy more. Then there's some selling. Then here, buyer's back. Up they go. So we can see the algorithmic buying that's going on in Vera here. And this is true for anything that has full time frame continuity. So, if we just go back, we will see this on both sides. Anytime these are all aligning, it's like, boom, algorithmic selling kicks in. It's like they're just sell, sell, sell. How do we play it? 2 up, red. So this was potential outside bar. And then you'll see 2 down, reversal. Everyone's selling. Does it go a lot further than our target? It does, because it's designed to do that. Now, what do I mean by that? Think this way. When you are trading, it's like a fight. And people say, it's crazy out there today in the market, right? It's difficult. It's because it's a fight. You're fighting other people. Like, the only way you can make a winning position is if someone else loses. So you're taking someone and you're like, punch them in the face. Now you're losing. What are you going to do? And this is what makes it hard, but it also makes it fun. Because what we're seeing in Vera, let's see, we just remove this here. What did they do on the daily group here, or the daily basis? During this day, it was going 2 down. Lower highs, lower lows, but it was green. So the buyers were aggressively buying while it's going down. So it's like, hey, price is going down. I'm still willing to buy this. It's like, okay, buy. They bought. Then you'll see it did reverse higher, but then it went red. It's like, well, this buyer is gone. Once we're below that daily open, that buyer's gone. Because they were only here during this trading day. They were only here above yesterday's highs and above this daily open. When it went red, it's like the seller was more aggressive. So now we have a buyer here, and we have an aggressive seller trying to go against that buyer. So it's like, think of the buyer. It's like the buyer's like, oh, market's going down. Boom. I'm going to buy like 100,000 shares of Vera. Okay. Price goes from like boom, 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 boom. Price goes up a little bit. Then it pops up. So it did go 2 down, 2 up reversal, right? Above this 34.64 when it was trading above that. And I'm not sure if I'll be able to replay mode that on like a 1-minute basis just to show you. Probably not. But during the trading day, we'll see. Yeah, it's not going to show me. But during the trading day, it did trade up there just a little bit. So what happened? It's like, well, the buyer came in the next day because they bought yesterday. And the buyer is like, I just bought my last 5,000 shares. It's like, I only had 100,000 to buy, and then I bought 5,000 more, and that's it. I don't have any more to buy. And then the seller comes in. They're like, boom, I just sold 50,000 shares. So price goes down. It doesn't go very far, but it goes down. And then this happens, right? Comes in here. The seller, they open the day, it goes red. So the seller comes in, they're like, boom, I have 1 million shares to sell. And then boom, all the buyers have to get out. That's what's happening. So it's like they bought, they tried to buy more, and then they got countered or rejected. And then boom, the seller comes in, they have a lot more to sell. How would we know that? Well, in replay mode, right? If we go in Vera, that's the day. I'm going to switch it over. Month, week, day, 60-minute. If we just go take a look over here, and hopefully I can find the exact spot we were at. I might not be able to. But let's just find anywhere there is full time frame continuity down. Like this. Yeah, so it's right here. So if we go to this exact spot on the day, oops, play it through. What was happening during that month? Well, the month was red. So this month, the seller's more aggressive. Noted. What was happening during that week when this daily reversal happened? So we're going to bring it right here. So when this went 2 up, 2 down during that week, right? When this broke below 33.44 during that week, you'll see we had the inside week, which went down. So we had a 2 up, 1, 2 down reversal, and the sellers are more aggressive during this week. So the month, the sellers are more aggressive. The week, the sellers are more aggressive. And they tried to buy this. It's like they buy. It goes up a little bit, comes back in. They're wrong. 2-2 reversal. They're wrong. Monthly seller, weekly seller, daily seller shows up. Boom. You'll see the 60 seller also showed up. Because if the monthly seller is going to sell, it'll show up here on the 60 as well. You'll see it went 2 up on the 60 minute, 2 down, boom, destroyed. So you'll note these guys on the 60, they bought, and then 2 up, 2 down, destroyed. These 60 guys just absolutely obliterated. The daily guys, they got destroyed. Anyone that bought during this week, they're going into a bigger losing trade. And this month, it's just going down. And if we were to look left, you see, anyone that bought it in all this stuff, they're going back to break even. They're not really getting destroyed. But hopefully you can see the month, week, day 60, when that aligns and you get a reversal, destroyed. Now, what you'll notice is not every reversal is going to do that. So the key, a lot of traders think of this wrong, but the key is it's like planting seeds. Like, forgive me here if you don't like the Bible, but in the Bible, there's this story. It's called the sower. So a sower went out to sow. It's like, what does a sower do? You have a thing of seeds, you grab some seeds and you toss them out. And then it's like, well, some seeds land on the rocky soil. It's like they grow a little bit and then they die. Some, they land, in the thorny soil. It's like they grow a little bit and then the weeds choke them out. And then others, they land in the good soil. It grows into this gigantic oak tree, right? So it's like you have it works a little and then nothing happened. Or the seed hits the ground and then it dies. And then you have the one where the seed hits the right soil at the right time, the right amount of sunlight, oak tree, right? And this tree is like 60 feet tall and it takes 15 years to grow or whatever, or 20 years to grow, whatever. But it's like gigantic, gigantic tree. This works the same way. So if you take a 2-2 reversal into full time frame continuity, it's like you're planting a seed. What soil is it in? I was like, we don't know. It's like, we're just going to plant the seed. And then it's like, I take it and boom, gone. And it keeps going further than I could ever imagine. Like you plant a seed and you wait 50 years. It's like that tree's gonna be taller than you ever thought it would be. So it's the same exact principle here, because what we're doing is we're finding aggressive selling or buying that's happening. And then we're taking a reversal into it. It's like, well, if we go to gold, just for example, we'll look at 4 different time frames just to show you how this kind of works across multiple. It does not have to be the month, week, day, and 60, although that's common. We can use the year, the quarter, the month, and the week, and that's still 4 time frames, right, on gold. So we're still doing the exact same analysis, just different time frames. And we could change this to also reflect that. So we can go time frame continuity by TFO if you're looking for this. I would suggest not using indicators. I'm just trying to show you this in every way I can just to show you how this works. But quarter, month, year, and the week. You see I have a lot of time frames. And for sake of example, we'll just remove the week. But when we're looking at this chart, it's like gold. This year, gold, what are they doing? How do we know to buy gold this year? And everybody said, we're above 244.22. And it's a 2 to the upside. So it's going up and the buyers are more aggressive. That's an uptrend. So what is gold doing this year? Anytime we're above the open, uptrend. That's good to know, 65%. And that's how simple it can be, right? They will teach you, or you'll hear, it's like, I had to spend 20 years to blah, 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 blah. And now I understand how to make money. And it's like, just get rid of all that. It can be as simple as you want to make it. But this year, man, they bought gold. Now, If that yearly participant, which is China's buying a lot of gold, same with some other countries, this yearly person is, or, group of people or institution or algorithm, whatever you want to say, if they're buying this year, it's going to show up this quarter, right? And let's make sure we're not in replay mode here. There it is. But you'll see every quarter that buyer showed up anytime we're above the quarterly open. And if we go to the month, anytime the month was green and the year was green, that yearly buyer was showing up that trading month. So it's like buy, 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 inside bar, consolidation, slightly higher high, and then it went red, so there was some selling, inside bar and some selling. Then buy, 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 consolidation, buy. And that's it. So you can see, if we just look at this uptrend on gold, which we discussed, you'll see this. We had a inside year signal. So it was a 3, 1, 2 to the upside. We call it the 3-1-2 Chicago. It broke here, 193.18. This is something we discussed on Twitter and on our macro video. We said buy gold. Now, that buyer has been here for 2 years. So if we go to the month, anytime the month is green, that buyer's been here. So it's like 2, 2, 2, 1, consolidation, break, 2, 2, 2, 2, reversal, consolidation, break of the consolidation, 2, 1, 2 up reversal. That's where you buy it. If you didn't get it down here, you get it there. And then 2, 2, 2, 2, 2, 2, 2, 1, 2, continuation, and it comes back in, and then 1, 2, continuation, and then there it is. So you can see the inside bar here on the month, it didn't really work. And again, it's like you're planting seeds. So like throw a seed out there. It hits the rocks, doesn't work. Okay, just get me out, right? Like if you plant a seed and it dies in front of your face, you're not going to sit there for 6 years and be like, please just like grow into a big oak tree. No, you're going to get rid of it. Find me a new seed, right? Here's the inside month. It breaks, starts growing a little bit. It's like, okay. Then the next month, like, oh, buy. Oh, all month, they just buy. It's like, there's your big oak tree. There it is. And then boom, boom, boom. They're just still buying. So key thing to understand. But you can see how, if we go down to the weekly, anytime we're above that year, that quarter, that month open, they are buying for sure, right? There's some profit taking in there, but they're buying. We did not have any reason to be a seller of gold at all. And if we go back, it's like, when would we have been a seller of gold? It would have been down in here. Anytime this was red, flipped some green, right? We could have tried to sell it here. It didn't work. Then the buyer's just kind of been here. Just how it's been. There's a little selling in here, but that's it. So we want to line those time frames up. Is this making sense? And for those of you guys in the chat, just let me know. I'm going to take a minute break or so. I want to see the chat filled. Like, yes, this makes sense. Or like, no, Alex, please explain this to me. This doesn't make sense. And I'll do my best. So just give me a minute. Actually, give me like 3 to 4 minutes. So I'll be right back. All right, hopping back on. Here we are. Did lose some people as we took a break. That's a beautiful thing. Thank you for those of you guys who are sticking around. Yeah, so let's see. Yeah, so the continuity indicator, it's great if you don't have all the time frames open, but that means you're doing it wrong, because you have to have 4 or more. Because, like, think of it this way. Like, for example, today I went and I played a poker tournament and I won. Wouldn't it have been a lot easier if I could have looked at not just my hand, right, but at like the guy next to me? Wouldn't it be nice to know his hand? Like I could probably win almost every time if I knew this guy's hand next to me. I don't even need to know the rest. I just need to know his. Now imagine if I knew everyone's hand at the whole table. It's like, I know what's going on. Therefore, I'm gonna hopefully win every time, right? Now, that's how we need to think about continuity. It's like, it's kind of like that. But the thing is it's not the winning part. Like, you're not going to win a tournament in trading just because you know this. But what you will do is you'll know which trades you want to be in. Because, like, now that you understand this, next year, are you going to buy things that are 2 down on the year and red? No, right? Because next year, I want to buy things going up. And I want to buy things where the buyers are more aggressive. Therefore, just like gold this year, I would like to buy things 2 up and above its open. And just so you understand that condition, if you're new, right? Anytime it's above this open, bullish, we want to be a buyer. Anytime it's above this, 257.71, it is a trend. So it's like it opened as a consolidation. Buyer was aggressive. It caused the trend to the upside, and then it just kept going. Beautiful. That's what we want to buy. Now, would you want to buy like UNH? Nope. Right? You're not going to buy that. And if you are, you're not doing it on a yearly basis, which is where the big move is. Because like you can see this year in UNH, 3, and then here, 367.95. It becomes a 2 above that level. So now it's a trend, and it's above its open, 351.60. So if those things are true, expect that it's going to keep going. There's your 40% returns. You just beat the market on average. Beautiful things. So we understand which trades we want to be in. It's like, if I can look at the poker table and I'm holding aces, like ace, and I know everyone else has air, like they have nothing. Like I have the best hand in the game, they have nothing. I'm going all in, right? Now, when the board comes out, maybe my aces aren't the best on the board because someone else makes a different hand or whatever. So things can change, but we know, at least we have an idea of what does the best condition look like. So it's just very important to understand that. Yeah. So now that we are now that we're getting through continuity, before we talk about how we're going to trade into continuity, which I see some questions about, I want to touch on the broadening formation quick. So the third universal truth of price is this. Again, there's only 3 things. So if you've already listened to 1 and 2, it's like you're this close. The third thing is that the broadening formation is how price discovery works. What I mean is this. To know where prices are trying to go is to know the broadening formation. So what is a broadening formation? Well, a 3 outside bar is a broadening formation. So if you see a 3, which is one of the 3 things price does, this is a broadening formation. So we will call this 3 a broadening formation. We can also call this a broadening formation as well. These 2 bars are a broadening formation to this bar here. So we could say these 2 bars are a compound 3, which means if we put these bars together, this is an outside bar to this bar's range. And then we could say this bar is 3 or A3. Other terms you will hear: tri, short for triangle. You will hear BF or broadening formation. There's a million other ways people will explain this, but broadening formation, triangle, 3, those are the main terms we're going to use. And it's very specific, right? It's like outside bar, that's a broadening formation. Compound outside bar, that is a broadening formation. And since we know this happens, and it's one of the 3 things price does, it's like you're always going to have this happening. And let me prove it to you. Again, this is not about me trying to show you what I think. This is about me showing you the truth. Like, if I were to bring out the law of gravity, right? It's like, I'm pointing you at the law. I'm not the reason the law exists. I didn't invent the law, right? So we go to SPX. These 2 years are a 3 to this year. Compound 3. So the high of this, the low of this, is higher than and lower than the high and low of this. So there's your 3. And you'll notice broadening formations. Just think of the word broadening formation. So it's broadening. It's like, what does broadening mean? It's like, well, if someone has broad shoulders, it's wide. Now, what if their shoulders were broadening? It's like, well, their shoulders were here and then they were broadening. They're getting bigger, right? It's expanding. So it's a broadening or a expanding, right? Getting bigger. And it is a formation, which just means there's a form to it. And the formation, broadening formation, is a 3. But what is it doing? It's broadening. So when we look at a chart, if we see 3, now we know price is in a formation, right? And it is broadening. So what is it forming? Well, it's forming a broadening range or a broadening formation. So what happens if we broaden the range lower? Well, the 3 simply got bigger. It broadened. What happens when it starts going the other way? Like, let's say we have an inside bar. So 2, 1, 2. So if we see this 2 down, 1, 2 to the upside, we know that's a reversal. It was like lower highs, and then it broke the highs. Now it's making higher highs. That's a reversal. Since we are in a range or a formation and it's broadening, right? What is it doing? It's getting bigger like this at both sides of the range, right? It's going, both sides of the range are broadening. What's going to happen? Well, if price doesn't reverse, it's going to go in at least 1 penny above this. At least 1 penny. Because it broadened, like the formation started here. Then the low got wider. So we have the low of the formation, we have the high of the formation. Then it made the new high, and then it kept broadening. And then let's say it were to reverse, broadening again. So it repeats, and this is why it's important. So when we look at a chart, we're looking at these broadening formations, it's like it'll start like this, and then it's going to get bigger and bigger, and this is how it works. So price discovery, what does that mean? Price discovery means new prices. So it's like, let's think. It's like Palantir, PLTR, or any other company. It's like Palantir IPOs. The stock, it's like the stock didn't exist. So it's like from here to here, it's like it didn't exist. Boom, new stock hits the market. What's going to happen? Like, what does the market do? It's going to discover the correct price of Palantir over time. So over time, let's just go to Palantir just to show you. Over time, we will see the price discovery broadening formation figure out what the best price for Palantir, the company, is. So over time, we will see there's your compound 3. So here is your broadening formation, these 2 bars. Then 3. Then we'll see we had the 2 down, 2 up reversal on the year. Where's it now going? $45.01. Because we expect at least 1 penny above that. Because price discovery works in broadening formations. It is getting bigger, even if it's by 1 penny, which is why wicks matter, right? Because people like, oh, I draw my levels off of this. It's like, well, the wicks matter. So we're not going to draw it there. We're always looking at highs and lows. So what does Palantir do? It's like they sell, they buy. Where did they buy? Anytime above the open here at 17, where's it going? $45.01. Right, if we get that level right. Then the broadening formation continued to increase in size. Now the broadening formation looks like this. Right? There's your highs, there's your lows. We can draw these in a million different ways. But since we know the price discovery works in broadening formations, we say a series of broadening formations, which means repeating. It's like broadening formation, then it broadens, and then broadening formation, then it broadens, and then broadening formation, and then it broadens. Like that's all it's doing. What we will see is if we want to draw these formations properly, we will draw from right to left like this. And then we can also draw right to left the same way on the lows. So if price were to reverse, let's say we go inside bar and then we break here, it's like boom, boom, boom. We have, yes, we can target this level, but since the range is broadening, we know that support and resistance will broaden over time. Because if we go 1 penny above this, who's to say we can't go further, right? So we will also have this as a target. So we go to Palantir. If we look at the year, if we're drawing right to left, we would see new highs to this, new lows to this, broadening, broadening, and then boom, right? It just keeps broadening. If we go on the monthly Palantir, outside bar, that is a broadening formation. We can draw it right to left, connecting that higher high to the lower high, this lower low to the slightly higher low, right? And then if we go to like, let's say a 60-minute, what will that look like? Well, it's going to look like a broadening range. And I'll blow it up because I know some people are on phones and, YouTube. But you'll see. It's like, what did Palantir do? What is price doing? It's testing both sides of the range. It's broadening. So it's like you'll see many different ones in here, but you'll see new lows and then new highs and then new lows. And then where's it going now? Other way. How do we time that then is the question. When the month goes green above 164.73, it is a buy until the end of the month in 9 days. If we're playing this monthly broadening formation, right? 3, there's your broadening formation, then you start trading it. And we know price will make new highs and new lows to this range, and it will get bigger. So if the month is green, above this level, 165, every reversal back into that has the month, the week, day, and 60 groups in our favor. So we look at the 60. If we go and we're looking at the just those periods where the month, week, day, and 60 minutes are agreeing. Month, week, right? I know this takes a second. Bear with me. We'll just do month, week, day, just to make it simple. Anytime the month, week, and day are green, it's like algorithmic buying or, right? Just the buyers are more aggressive. It's like, boom, all the way up they go. There is periods in here that are gray. What are they showing? Profit taking. It's like they buy, they take some profit. And or people sell short. And it's both, right? People are selling short and they're profit taking. And then the buyer's back, boom, all the shorts have to get out. Anyone that sold, they got to buy and get back in. And then you'll see profit taking. And then the buyer's back, then profit taking, right? So it's always, since the ranges are always testing both sides, it is subject to change. But this is why the big time frames are useful, because it goes green here, and then that doesn't change all month. Same thing with like the year on the Bitcoin or on the dollar, right? It's like it goes green, and then it doesn't change all year. It's like that's the one we want. But you can see how this is working, right? CRT. Yeah, CRT pretty much just copied everything the strat did, renamed it, and then also forgot to leave in all this other things, which is really funny. But, you know, we love everyone. So if you're doing CRT, this is just gonna make you better. And if you hate us, then, you know, so be it. No one likes the truth. But this is how we want to think. What we want to do is we want to time price discovery broadening formations with reversals and something we call actionable signals, which is just ways price reverses, into full time frame continuity. Because again, similar to like if I'm playing poker and I know everyone's hands at the table, it's like, well, they got a good hand, like we know. I know if I'm going to beat them or not, or at least I have a good idea. It's like I could have 2 aces, which is the best hand you could have, and everyone else could have bad hands. It's like I have a pretty good idea. Like if you're going to bet on someone before we start playing, it's like you're going to probably bet on me because I have the best hand before we start playing. So when we're playing this game, it's very similar. You have to make sure, it's like, do we have the yearly in our favor, the quarter, the month? Right? Are all of those things in our favor? If so, the best hand to have is probably that. Like you want to probably be buying because everyone else is buying at that point. So what we want to do is time the broadening formation into that buying because we're going to pair losing hands or losing traders with this really aggressive buyer. Because imagine this again, if we're looking at Palantir, it's like we have this aggressive buyer in here. Right? It's like you can see they bought it and then it went down, they bought it, they went down. It's like it's consolidating, which is what starts. You'll see a new broadening formation in here like this. So there's your new high, new low. The second this opens, it's now coming back through this broadening range. Since we know after a new low, it's trying to do what? Make a new high. We can gauge the magnitude. We can say the 60 in the day went green here. The month was already green. So we had, 3 of those 4 time frames green until we got above all of them. So when we're looking at this, everyone starts buying. Where's it going? It's trying to go here, right? Top of this range. What else do we know? Well, this year, this quarter, this month, right? This week, today, they're buying. So anyone short in this broadening range, once we are above them, so if we're above 188, what's happening? Anyone that shorted from 187 all the way down into here, 177, they are in a losing trade. What do they have to do? They have to buy Palantir because they're wrong. It's like you shorted, it's above you, you're wrong. So what do they have to do? It's like they're going to buy. What does that do? It's like, well, we have the bid, we have the offer. If they go and buy aggressively to get out of this losing trade, what does that do to price? It's like prices go higher and then they're forced to buy higher and then price go higher, right? And this is all that's happening. So it's like, boom, 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 get me out of the short, get me out of the short. And then it's running. What else is happening? You have this yearly buyer who's like, I want to buy Palantir at 80, at 100, at 120, at 160, at 170. I'll buy it at 200. I mean, shit, I might even buy it at 300, right? It's like this buyer is just nuts and they have so much money. It's like they're just willing to buy. So you're pairing up these short traders or like, I need to get out of this short with the crazy person or, really smart person, however you look at it, who's just buying Palantir at whatever price it shows. It's like, it shows up. It's like, I'll buy. And then the shorts are like, oh my goodness, I'm going to lose my house. Like I need to get out. Right. So you need to pair this loser with this really aggressive buyer who's like just going to steamroll them, like just destroyed. And this is what it looks like. It's like they sold Palantir the month of November. Like they did aggressively. Like they really sold it. When this goes green, anyone last month that sold is going to have to start getting out. Because what if you sold at 147? It's like now it's at 160. It's like you got to get out. What if you sold at 177? It's like once price is above that, you got to get out. You got to do something, right? Either you're going to get out or it's like maybe I'll just put my stop up at all-time highs. Like you got to do something, right? Or else you're really going to lose. So when we go and look at the biggest trades, what it is a loser meeting full time frame continuity in the other direction. So if we just look at the yearly, they sold, and then we get above all those guys. Anyone that sold in this range, it's like they sold here. Once we're above 45, anyone that's short Palantir, good luck. And the buyer is aggressively buying all-time highs. Good luck. Shorts are just demolished. If we go to Tesla, anyone that sold in 2022, the second we're above the yearly open at 118.47, good luck, right? Like, they're aggressively buying. You got to get out of that short at some point. And if you don't, if this goes reversal above this, which it did, 2 down, 2 up reversal, it's like you got to get out, because we're going to go and take this out since we can gauge magnitude. We know where price is trying to go. It's like, if we're going to take this out, these shorts, good luck. And then when we look at these wicks, same thing. It's like it went down, they shorted, then it went green. Good luck. You got to get out of that. Boom. Goes down, they shorted, goes green. Now you got to get out. And then it goes up 20%. So we can do this. We can look at a bright red bar and we can see that seller. We can also see when the colors change, because when changes happen is when losers happen. So if we look at the monthly Tesla, it's like it's red pretty much all month. Then it goes green here. Losers. Anyone last month that sold, they got to get out. Boom, they get out. 17% 1 month. That's a great trade. Right? Awesome. What about the quarter? It's like they sold, January and this whole quarter. We'll see it became a 2 down and then went green here. It's like, good luck. You might have to get out of that. And then it goes reversal above this, 366.69. Now these shorts definitely got to get out. Boom. Then it goes red here. So there was some short selling, some profit taking, but it didn't reverse. So when it flips back green, it's like, uh-oh, boom, all the shorts got to get out again. What's another word for magnitude? Target. Other side of the broadening formation. Where price is trying to go. You can call it whatever you want. But magnitude, we will speak in terms of magnitude and broadening formations. So if we see a reversal, this is the trigger. This level is always the magnitude. Doesn't matter where this shows up. It's always going to look like that. Both ways. This would be the trigger. This is the magnitude. And then magnitude, since it's broadening formations, if we have, let's say we have a range like this. If this breaks here, we also know, since this is a broadening range where both sides of the range are tested over and over, and we know price reversed at the bottom of the broadening range, anyone short in this range, we want to take them out, which would be what? Here. So we're going to go boom, boom. This is also magnitude. And this is why the term is important to know if you're confused. Because yes, magnitude, or the first target, is this, but since we know broadening ranges are how price action works, if price doesn't reverse, it's going there, right? So if we go to Meta, 2 down, 2 up quarter, we draw our formations right to left. So this reversal happens, that's when we draw, when it reverses. Because we know it's actually going now in a new direction. So it's like, here's your broadening formation. New low, reversal. Where are all the shorts? Well, this bar, this bar, this bar, this bar. It's like, well, can we take all the shorts out? Because we know price does this, makes the new low, then it makes the new high. So long as price does not reverse, it's trying to go to 400, $382. This occurred at 142. So reversal, higher low, continuation, 2, 2, 2, boom, target hit. And then, see, top of the range, it's acting as support at this point for Meta. We'll see if that continues to stay the case. Does this make sense? All right. So I'm not picking on this person specifically, but they say, does the strat work mostly for 1 hour and up? False. Your question's wrong. That's like saying, does gravity work mostly in Kansas? Does gravity work in Russia? It's like, it's the wrong question. Your question should be, how do I make money with gravity? Right? So wrong question. It works on everything because this is just price. It's like, if I told you the sky is above you, it's like, does that work on like whatever? It's like, what do you mean does it work? It's like, the sky's just above you. It's like, that's how it is. So hopefully that makes sense. Now, as far as how we're going to do this, or what we want to do, since we know the three universal truths, the first being there's only 3 scenarios. Again, $10,000. I'm putting it out there. $10,000. I will Venmo it to you, or I'll hand deliver it. I'll fly to your house, in front of your door, if you can find more than 3 scenarios. Let's do it. Number 2, time frame continuity, which tells us we want to trade in the direction of the most 2s. It's like a 2 up on the year, 2 up on the quarter, 2 up on the month, 2 up on the week. It's like we want to trade in that direction, or the most potential 3s. So it's like if we're a potential outside year and we are 2 up quarter, 2 up month, 2 up week, it's like that's where we want to trade. That is the second universal truth. We want to trade in the direction of time frame continuity, full time frame continuity. And then number 3, price discovery works in a series, which just means repeating broadening formations, aka price discovery broadening formations. And as you can see in meta, this is how it works. New high, new low, new high. There's your price discovery. They're testing both sides of the range. And you can see it even in here on the quarter recently. New highs, all-time highs. New lows. It hit its quarterly magnitude, which, there's $4 there, but it hit $4 of its magnitude. Then back to the new highs again. And then it comes back in trying to make the new lows again. So we're seeing this over and over. Since we understand those 3 universal truths, what we want to do is take reversals, which look like 2-2 reversal or a inside bar reversal, back into universal truth number 2, time frame continuity, month, week, day 60 groups in our favor. And excuse me, we can change that. We can say like the year, quarter, month, week groups, or we can use all of them, which is what we should do. We just want to make sure we're trading in the direction of the most groups. So it's like if they're buying this year and this quarter and this month and this week, it's like, should you be shorting that? No, we should be buying that. But let's say you're trading this week. It's like the week is red, the day is red, the 60 is red. Even if the month is green, 3 of those time frames are red. We should either trade in that direction or wait until the month, the week, the day, 60s, until they all align. So you make sure we're doing that. And then we need to hold the winners, cut the losers, like meta. If we see a 2-2 reversal, and this starts, I'll show you here where this happens, because when this happens matters, but you'll see this. So you'll see the compound outside bar on the year, that's a 3. These 2 years, if we were looking at a 2-year chart, this is your price discovery broadening formation. These 2 bars outside of all of these bars. So the year goes green here, 122.82. Anyone that sold last year, what do they got to do? They got to get out. Good luck. How do we get in that? By timing the 2 down, 2 up reversal anytime we're above 142.39. We could have also tried to buy it above the yearly open, anytime above 122.82. Then, as long as this doesn't reverse, meaning higher low, higher low, higher low, higher low, higher low, as long as we are making higher lows, we expect the other side of the range to be taken out. So those are the 3 things we want to focus on, the 3 things that matter, right? The 3 universal truths. And one of the ways we can do that, finding the broadening formation, trading, in this case, a 2-2 reversal back through the broadening formation with the year, the quarter, the month, the week, the day, the 60. Anytime all of those time frames align is when this is going up. And we have, right, all year to do that during this year, and then all year during this year. And anytime this year is green this year, we technically could be doing that. So hopefully that makes sense. Now, some actionable trading plans that we have. We will be doing a sale for Christmas and stuff. So I'm going to discuss a little bit about that. But I'm going to give you the strategy. So like, if you want the stuff that we use to find all the setups, because there's a lot, we will be having an offer for that. You can go check us out at stratalerts.ai. But I will give you the strategy. So if we go in here, we have what we call the radar watch list. And all this is doing is it's finding the specific conditions we have discussed. So inside bars. When an inside bar happens, we know a 2 is going to happen after an inside bar. So we can go and look at those and know, it's going to become a 2 eventually. It might not happen the day after. It might take a couple days, but it will become a 2. And if that 2 fails, it will become a 3. So we look at the inside bar list, and we can do it on a daily basis. So if we go here and we go Tesla, just click on it. This is our inside day list. You'll see this 2, 1, 1, and then it's going to become a 2. Where would it become a 2? Well, if we took this out, 490.43, or took this out, 474.93. If it breaks the 2, what would be the target? Well, the target of the 2 would be the low of this bar, 466.54, or the high of this bar, 495.40. So if we break 2 up, we know we're targeting up in here, 495. If we go 2 down below this inside bar's lows, we know it's trying to go to here, 66 something. So there's your inside bar. We would look for this to trade it the next day. Now, why do we do that? Because our signals, such as the inside bar consolidation, is a signal. This causes price movement because it's consolidating, then it's consolidating, and then it becomes a 2 to the upside, which signals, where's it going? The high of this bar, 367.84, which happened before you can see the inside bar. So 1, 1, 2, 2, boom, it takes out that high, and then it takes out this and this and this, goes to all-time highs. So we tend to see after inside bars, movement, which is how you make money, right? Inside bar goes 2 down below this, 372.50. Boom, takes out the first target and then some. And then it keeps going for a little bit, and then we reversed. But hopefully this makes sense. So we can look each day for new daily setups. So every day there's new setups happening. We can also do this on the bigger time frames. So if we go to our scanner, which you can do this in Thinkorswim and everything else, there's all these different companies that do it. We just do it the best. If we go to the scanner, let's say we want inside weeks for next week. These are all your inside weeks. What if we want to have an inside week with a broadening formation? Well, a 3 is a broadening formation. So if we look for 3 and then a 1, that is a broadening formation with an inside bar. So if we go to something like Spotify, we have 3 broadening formation, 1 consolidation. So either side of this 1 would get our attention. And we know the magnitudes. So if we are above 59699, it's going to 620.96, only if we're above it. If we're below 56228, it's trying to go to 54873, only if we're below it. So this gives us our rough idea on the weekly. Now let's go look at all the other time frames, because this is how we add more evidence. So this year it's going up, but there's a lot of profit taking, and they came back. This quarter, what are they doing this quarter? Inside quarter down. Guess what? We knew about that last quarter. So if we look at last quarter's inside bars breaking 2 down, Spotify's right here. So if we were scanning last quarter, we could have found it with the inside bar scan. So below this on Spotify, 5.9, or actually, my bad, below 615.63, we are looking for 475.01 all quarter. We only have 9 days left, so it's unlikely to do that in 9 days, but that's what we would have been looking for. The month is a 2 down and it's red. So this month, sellers are more aggressive. It's going down. This quarter, sellers are more aggressive. Inside bar down with a target or a magnitude. And then the week, if this inside week breaks down, guess what? Anyone that bought during this trading week needs to get the frick out of the way because they're wrong. This month it's going down. This quarter it's going down with a signal inside bar. And with the inside week down, this inside bar would confirm the direction of the inside quarter to the downside. So anyone that bought in here, if this breaks below here, right, 562.28, these buyers are wrong. They're going to have to get out. Now, if it breaks up, anyone that sold during this week, which it was inside, so they weren't that aggressive, anyone who sold during this week is in a losing position. Now, if you sold this quarter, are you losing? Not really, right? Not many losers in here. If you sold this month, are you losing? Maybe. But if we look at this week, right? If anyone sold during this week, if we're above that, those guys are definitely losing. So we'd only have the week for evidence. Versus if this breaks to the downside, we would have the quarter going inside down, the 2 down on the month, and the inside week down for evidence. So you can see how much evidence you would have if it breaks down or if it breaks up. So we would prefer to the downside because we have a quarterly target to the downside. However, the end of the quarter is pretty soon. So think this way. If we're getting to the end of the quarter, and let's say you're a hedge fund and you were selling Spotify, why were you selling it? Well, are you shorting Spotify? Maybe. Is it more likely you bought Spotify at 97 and now you're selling some at 600 because it's starting to come back? Yes. So why did it go down? It's like, well, whoever has like the millions of shares of Spotify, or at least like the hundreds of thousands of shares of Spotify, enough to sell to actually make it go down, it's going to be institutions, right? Banks or hedge funds, countries, right? Pension funds, just anything. Institutions simply means like a big pile of money, right? Doesn't matter what it looks like, but it's institutions that are likely selling this. So if they wanted to sell Spotify this quarter, they had all quarter to do it. Now we have the last 9 days. So that selling might just be done. Like it didn't go that far, but they just might be done. So we can play this either way, but we know we would have more evidence if it broke down just because of the quarter, the month, and the week. Is this making sense? The other thing that can happen with the inside bar, which we do look for, is the 3. Because again, once a 2 happens, it can go 3. And that we actually prefer it. So if we have, Spotify, let's just say it was like this. Weekly, right? What if it breaks up, hits its target, and then starts coming back? And then it goes red. It's like, uh-oh. The buyers are getting countered by the quarterly and the monthly seller. And now the week is red. So the weekly guys are selling too. Destroyed. Because they bought it and they're like posting on Twitter, wow, look at my Spotify just went up $30. High five. And it goes down 30 and they're like, get me out. And then boom, destroyed. Right? So you can see what's going to happen. You don't know. And this is the thing. It's always a mystery. It's like, is it going to become a 2? And if that 2 happens, does it stay 2 or does it become a 3? It's a mystery, but everything is. And this is the problem with trading education. They're like, if you know this, then you will be able to tell the future. And it's like, you're not God. You can't tell the future. But what I can tell you is what we know to be true about price. 1s, 2s, 3s, time frame continuity, broadening formations. And we will go through just a few more. We are at the 2 hour, but we have just under the 2 hour mark. Let me double check here. Yeah, it says 1 hour 53 for me. So just under 2 hour mark. We're gonna be ending it off soon. But let's just go through it and we'll just show you some other things we can do. So we can look for ones, and we can look for the ones to become a 2 and then the 2 to become a 3 if it fails. So we're ready. We're willing to trade both ways. We can also scan for setups. Like let's say, if we go to the radar watch list, right? These are all inside days. What if we only want the inside days that are going up on the year, the quarter, the month, and the week? Well, it's really only Tesla. So it's like, if we're going to be picky about it, Tesla's probably the one we want to be looking at. We could also maybe be looking at Hood, because if we go to Hood, and the beautiful thing is we don't need charts. It's like Hood is inside month. Do you know what that looks like now? Probably. It's going up this quarter. Do you know what that looks like? Probably. Right? It's going up this year. Do you know what that looks like? Yep, 2 up. It was going down last week, but we are inside day 3-1-1. So what happened on the day? Broadening formation 3-1-1 consolidation. So the daily's consolidating. They went down last week. And then this quarter and this month, or this year, they're going up. And then the month is consolidating. So it's like this seller that sold last week doesn't really have much help, because like the month isn't going down. The quarter is going up. The year is going up. So what happens if Hood reverses? Well, here's the month, right? They sold last month and then won. So it's probably not going to become a 2. But we go to the day. Double inside day. We look at the week. This weekly, what could happen? Well, if this inside day breaks, these sellers last week didn't change anything, right? Like we said, they didn't change. Like the quarter is still going up. The year is still going up. The month isn't even going down. So it's like, we don't have much evidence of these bigger guys, right? Institutions, big pile of money. We don't have, there's no evidence that they're selling. We just know last week someone sold a little bit and then price just went sideways. So what happens? It's like they sold a little bit and then here's our inside day. What happens if that breaks up above 122.93? It's like, well, if that happens, maybe on the week we would break this 124.88. What would that be? That'd be a 2 reversals to the upside. So if this daily breaks, it breaks the week. And then what? Well, anyone that shorted during this week, they might have to get out because prices are now going up on a weekly basis, on a daily basis with signals, which cause movement, right? The reversals, the inside bars, they cause movement. And then that yearly guy and that quarterly guy, they might still be buying. Now, again, we're getting to the end of the year. So they're going to reset next year. And this is a beautiful thing. If you're just watching this, you're like, oh my gosh, I understand. Or you're like, wow, I don't understand it fully, but I can see it. This is what I wish someone told me. You need to focus on the things that are actually moving. Like China's been buying gold for 2 years. That's been the best long trade, better than the SPY. Like it'd be, if you invested in gold when we discussed that yearly signal in gold, you would have done better than if you invested in the SPY. So it's like that yearly really mattered, like a lot. So going into next year, what's really going to matter? Who's going up? Who's going down? And the thing that I forgot to add, where are the biggest buys occurring? Like where is it going up 1,000%? Like that matters. Why does that matter? Because when we look, if we just go to gold, right? This is what we're looking. This is the best trade in the world right here is gold. It's like you buy it at the beginning of the year and then the month or the quarter, it's like 2, 2, 2, 2, 2, 2, 2, 2, 2, right? You're running out of breath. There's just so many 2s. It opens and then initially to start the year, it goes 16%. So it's like, what happened? Aggressively buying. Then what? Well, that buyer's still aggressive. It goes up to 20%. And then what? Well, now it's up 35%, Alex. And then what? Then it's up 50. And now it's, right? It's like, what happens? You plant the seed and then it goes a little bit, and then it just, right? The tree starts growing. So just, you really need to understand this. If you're an investor, so important. Like we've ran the back test. I actually haven't looked at it, but let's just pull it up now. We have a back test coming from, we have these guys that we work with who are on Wall Street. Let's see. But they've been working on Wall Street for over a decade. The guy who invented the strat named Rob Smith, the guy we're working with, his name is Mike. He actually worked at the same company Rob did, at least, it's kind of separate, but it's like a trading company thing. And the guy we're working with was head of the options trading at T3, which is a company from a long while ago. But Rob Smith, who invented all this stuff, actually worked there with him. And he has been creating all of our strat stuff and strategies. We are opening a hedge fund. So if you're an accredited investor, we will have links and stuff, and you'll be able to go and actually just invest in strategies that automatically trade the strat, which is a beautiful thing. But I want to show you guys the back test he ran. I don't know if it's any good. It was on a yearly basis. But yeah, this. So this was ran on a yearly basis. You'll notice there's not as much, but let's just see, right? And what we're going to do is we're going to go to, what is it called? We'll probably use Grok. Hopefully I don't. You always got to check your history. Everyone talks to AI and you ask weird ass things sometimes, but that's everyone. So here, we'll just put it in. Here is my back test data. Just give me a PNL with a 100K account invested. Ignore whatever PNL or other things are included. I just want to know how much I would have made if I invested, let's say, 3% of my account in each of these positions. And there's not many trades, so we'll just see what it says. Well, that was fast. So you can see from our yearly data, it's going to use a different, there's different stuff going on here. I just want it to be really simple. But you can see, if we just put 3% of our accounts, like barely anything, we return about 2% on 100,000, right? So not that impressive. Now do the same thing, but invest as much as possible without using margin or AKA going over the 100K. I don't know what it's going to do, but we'll see. But the thing I want to show you is just, even if you're really, like if you're really conservative, which like 3% really conservative, you can still make money. Now on a yearly basis, like you're buying and then you wait 12 months. So like there's not many trades. So we're likely not to just use 3% as a positions trader or someone that's trading on a yearly basis. What I do want to show you is what it looks like if we use that 3% on something that's like more like every day. Every day we're doing something. And this is what that looks like. And this is our current back test for the hedge fund. We are literally launching like beginning of this coming year. This is what it looks like. So this is the curve starting at $0 with 10K per trade, which is around 100K or so on the book. This makes $1 million in 2 years, 10K per trade, right? And now there's a lot of trades in here, 1,500 trades over 2 years. So in a trading year, you got like 256 days, give or take. So times 2, it's gonna be 512. So 1, 4. So you see 30 trades a day, but 10K per trade produces $1 million over 2 years. And that's without any compounding. So this is not compounded, which is the beautiful thing. Now, when we do compounding results on this type of thing, what we see is absurd. And this is trading shares. Just trading reversals and holding until they reverse. Like that's it. It's like, oh, price reversed in. It reversed again, get me out. Or flip me short, depending on your time frame continuity. But this is the type of thing we can see if we are consistent in the conditions we trade. And this is the last thing I want to leave you with. Since we know 2-2 reversals are very common, inside bar signals are very common, what I want you to do is focus on this. 2-2 reversals into full time frame continuity. Inside bars into full time frame continuity. The other thing we can do is use higher time frame signals with lower time frame signals to increase that odds or increase the odds. So you can have full time frame continuity, the month, week, day, 60, all green. But if you have a monthly signal, a monthly target, and then you have a daily signal and a daily target, it's like you have 2 signals and full time frame continuity. The signals, these two signals, create losing traders. So when these signals are happening, you have losing traders getting out. Continuity, you have aggressive buyers taking the offer and causing those losers to they have to pay higher prices. So this inside month on gold creates losers. When it breaks here, every time frame, the year, the quarter, the month, they're all green. So it goes a lot further. And if we look at, I don't know what time frame this is. Weekly gold, right? 2 down, 2 up week. What happened? It's like, what happened? It's like, well, you sold here. It reversed here. You had to get out. And then 2, 2, 2. Why would it do that, Alex? Well, the month was green. The quarter's green. The year's green. It should just keep going. And where's it going? Back through these guys who shorted and or sold, trying to take this out. Because we have a 3 broadening formation. Right? Then that 3 got bigger to the downside. Then price reversed up. Did go down, but then came back and then reversed up again. It's trying to take this out. Given no reversal, 2 down, 2 up, 2 up, 2 up, 2 up. It's going to hit this. Given no reversal. We also have a monthly signal, which is about to run out. 9 days. And I'm going to take a look at the chat now. Weekly setup. Weekly signal, just as good as a daily signal. It's just better because it's longer. We can trade off of monthly signals. We never said we couldn't. The thing you have to realize is the bigger signal, it's less instantaneous. Because, and everyone here, right? If you've traded, I want to get this done with. Not that I want to keep talking, but I need to go to sleep. I also have to get our weekend vid out where I'm going to point you guys to exactly what you should look at, although we have a shorter week and less volatility. But I'm going to do that after this. But how do you trade it? If it's above the signals break, you're in. If it's not, you don't want to be in. How wide that threshold is up to the trader. So if this is the break of the signal, you have the ask right here. You have the offer, or my bad, you have the bid right here below this bullish signal. So let's say it's inside bars high. You have the bid and you have the offer. So if it's sitting like this, what you do is you go from the bid and you're like, I'm going to take the offer, which causes the candlestick to be from here and go boom, trigger. Your stop can be the bid. So if the bid is $100 and the offer is $101, you can buy at 101. Your stop is 199 cents, 1 penny below the bid. That is the best way to do this because we are taking losing traders and pairing them up with Goldman Sachs trying to buy 1 million shares. So if you just sold 1,000 shares short, or let's say you sold 50,000 shares short, you're really short. Goldman Sachs comes in and they're like, buy. I just bought 1 million, or I'm looking to buy 1 million shares. It's buy. We're going to buy for the next month. You have to get out right away. So when we pair that up with the signal, it's losing traders, anyone short in this range, if I take the offer, it should just break and then boom, gone. Shouldn't come back. If we are correct, right? And we can't know the mechanics of right now, we don't know if Goldman Sachs changes their mind. They're like, uh-oh, I need to get out of this whole position. We don't know that. So what we can know is they're really aggressively buying. We have this short trader over here and they're wrong if the reversal happens. And when the reversal happens, they're wrong right away. And this buyer's still buying and it just reversed. So that buyer's there. Is it reversed? As far as we know. So it reverses, it should just go. Imagine this. Imagine China just bought gold for the past 2 years, which they did. A lot of gold. And then China, let's say 2 years from now, let's say we see this on gold. Inside bar, and then it breaks down like this. It's it starts here. When it breaks down, it's well, it's reversing. China, what are you going to do with your gold reserves? Are you going to sell them? Are you going to sell them and buy them back in a different currency or buy a different currency with it? Are you going to invest the gold? What are you going to do with it? It's going down in value. China just decides we're going to sell off half of our gold reserves. boom. Because not only is China selling, but so is people who are shorting the market, right? And I'm not saying this is going to happen, but I'm just trying to give you an example. It's like they bought inside bar, it breaks down, and now they got to do something. Either they're going to get out, or they're going to buy more, or they're just going to sit there, and then we have to see what these guys are doing, the new guys that are entering the market. So we can't know for sure, but what we can know is if it's going to work, it should go right away. The best ones do. And this is true for all time frames, although the longer term, right? Longer term, it's just going to take a little longer for it to kick in. It's like Meta here. Quarterly breaks here. So if we go down and we go to like a 60-minute, let me just go, I don't even know if it'll let me do that, but let's see. We're going to go back to this quarter on a 60-minute basis. If it lets me, it does. This is last quarter's highs. Let's see what happens when anyone short Meta goes into a losing trade. 142.39. And it's not just losing trade. It's losing trade paired with reversal, paired with buyer, right? So this is the break of the quarter. Boom, gone. Right? Like, that's it. So you can trade the quarterly, but what we don't want to do is this. We don't want to be like this. Giant stop and like this. Because when you do this, what's going to happen is you might make a little, make a little, boom, lose your whole account, gone, and you're out of the game. So like think of the hedge funds. Like if you're around with GameStop or you heard about it, it's like GameStop went from like $3 to like 200, and the hedge funds, they were short at 3, at 10, at 15, at 20, and then it opens, it's at $100, and the hedge funds are like, oh no, oh no, the broadening formation. I didn't know about that. Then it goes to 200 and they're like, oh my, like we got to close the market down. Like we can't let them buy any more GameStop. They're willing to pay at high prices. These retail traders, they're willing to buy and take the offer. And I'm trying to short this. Right? There's just more aggressive buyers here. So we see that happening. We don't want to be those hedge funds because the government had to come in and Robinhood had to close trading down, and like they just had to literally rig the market to make the market go the other way so that they could make their money back and then some. It's like, we can't do that. So we don't want to have this gigantic stop. We would rather be this guy. $1. Because are you going to get stopped out? Yes. And this is the thing. Everyone wants 100% win rate strategy. I never lose. I'm the best in the world. I can put my whole account in there and I don't even have to stress about it because it's guaranteed. It's certain. First of all, it'd be really boring if it was certain. You wouldn't want to do it because there'd be no work to do. It's certain, right? I could just get an algorithm, be like, boom, certainly this is going to work every time. And I'm a billionaire tomorrow. Doesn't work that way. The way it works is, again, like planting seeds. It's like, grab the seed, toss it. That seed dies. Grab the seed, toss it. That one dies. It's like 10 seeds die. It's like they die. Then oak tree, 60 feet tall. Right? So if that's how it works, like when you go fishing, if you've ever gone fishing or if you've heard of fishing, you cast the line, you didn't get a fish, you cast another spot, and then boom, you catch a fish. And then if you got a really good spot, you catch another, and then another, and then another, right? It's the same thing. So we buy Meta, stop out, buy Meta, stop out, buy Meta, boom, gone. Okay, this one worked. We just found a really great fishing spot. How long do we have, Alex? The rest of the quarter, and then we have until all-time highs, so long as the quarter is still going up. So what can we do? We can look for these guys are short, price starts going back through those guys, and we can buy more. So we don't have to just trade off the quarterly signal. We can go to like a daily chart in Meta. Every time price reverses back to the upside on the day, it's trying to make that quarter greener, right? The same thing on the week. If we go to the week, any reversal in Meta on the weekly, another thing we can trade. We can also trade potential threes. So it's like this 2-2 week, we can play off of that. Maybe it stops us out. That's fine. 2 down and green. Anytime this is green, that's a buy. Boom. And then 2, 2, 2. There's your oak tree, right? All the way up. And then this seller. Is this seller correct? Nope. You're nowhere near reversing the quarter. Good luck. Slightly lower, and then boom, destroyed. There's the seller. Inside signal. Is this seller correct? No. Because if we just extend this left or to the right, notice quarter's still green and 2 up when this seller happens. So if it doesn't reverse, it's still going up. 1 breaks here. This seller, they got to get out. Right? And this would be the magnitude. And then here's your oak tree. 2, 2, 2, 2, 2, 2, 2, 1, 2, 2. Reversal. Is this seller correct? It's like, well, when that happened, we just extend right. The quarter was still 2 up. So maybe they could have changed things, right? And I'm not saying things don't change, but are they going to reverse from 291 and then go all the way back to $100? Probably not. So if we bought it down here, we can just hold that. We can trail our stops. Yes, we can start moving our stops higher, but we don't have to get out when price reverses. We only have to get out when we are in a losing position. Therefore, create winning positions, hold them, exit losing positions. At the end of a year, a day, a week, a month, if you do that, you will be left holding winners. So the last thing I'm going to add here, I know it's just getting long and long, is this. What we can do is we can take these signals, we'll use tight stops. At worst, you want to use the open, because the open is your continuity level. If continuity changes, it changes what's happening. That's how 3s happen, right? So if we take this inside week and it breaks here, 238.16. If we're trading shares, we can put our stop down here, risk $3. We can put it at the open, risk $1.29, or we can use the spread, right? Again, that little spread, maybe it's like 50 cents. We can put our stop right at the bid, right below it when that breaks. And again, it might break, stop you out, break, stop you out. But the key is we don't want to like break, hold, lose all my money, and then I can't trade anymore. It's like, that's how you blow up. So we can either do battle, as we call it, using signals or just taking the break, tight stop, or we could do a slightly wider stop, but I wouldn't suggest it for new traders. I want you to just go in there and stop out 1,000 times, because then you become really good at planting seeds, right? Like if your whole job is like, I'm going to plant seeds, and then the ones that grow, I'm going to hold on to. The ones that don't, I'm not going to hold on to. It's like, what's the most important part of the job then? It's like you plant the seeds, the growing and everything happens like when the sun comes out. It's like, are you making the sun show up? It's like, no. Are you making the rain show up? No. It's like, you're just planting the seeds. So be really good at planting seeds, and then be really good at not cutting down a tree when it just started growing. Like, give it some time. If you do that, that is going to work, because that's how farming works. It's how fishing works. It's how everything else works. It's the same in trading. If you have the 3 universal truths, you can do it. That all being said, I am going to call it a day here. As far as the New Year's sale is concerned, we will have a sale on our, it's the same thing as our Black Friday sale, which everyone, you can go and see, we'll have testimonials on the website. Everyone's like, this is awesome, amazing value, everything. And they're learning a lot, and they're doing pretty well. You can go and check us out at stratalerts.ai. All those sales and specials and everything will be emailed. So if you want to go and take a look, you can go to start here for free, click it, your name, your email. You can give us a fake name if you want to, right? We're not going to sell your data. We just use it to send you emails, but give us your name, your email, and we'll email you with offers over New Year's, as well as we just send out education and all the other fun stuff, like when we do open live streams like this one that you're watching now. So you can go check us out there, and you can also check us out. x.com/alexsoptions is my Twitter, or X, whatever you want to call it. And if you do the start here for free, you also get invited to our Discord, which has thousands of members in there. So if you want to, we got stat trading. This has been around for like 5 years, half a decade at this point. We have a ton of strat traders in here that have been trading the strat for a long time, and you'll see them as moderators. We also have a lot of new people and just people who have been around for a while that are not moderators, but you can see it just keep going and going and going. It's a great community to be a part of. But this is all I've got for you. If you're interested in learning more, go check out all those things I just said, and I will see you guys in the next. So adios. Have a good rest of your night, everyone, and happy holidays.